When Jeremy Grantham speaks, the market listens. Hello and welcome back to our channel. Today we'll be telling you about why the collapse will rival 1929 according to Jeremy Grantham. Watch this video till the end, as you will also come to know about more global market updates towards the end. And don't forget to subscribe to our channel. Let us begin. The market listens to Jeremy Grantham, and he trusts that the market is standing on the verge of a catastrophic decline, on par with the 1929 Wall Street catastrophe. Grantham is the co-founder of an investment management organization known as Grantham. Grantham, who is a prolific investor, Mayo and Van Otterloo, or GMO, has once again sounded the doomsday alarm, claiming that the market has until the conclusion of the vaccine deployment to burst the bubble. Grantham's prophetic market calls are worth paying heed to after predicting the bull market's comeback in 2009 and avoiding the dot-com catastrophe. Grantham, who has decades of investing experience and an incredible record of track for his forecasts, now gives us some detailed insight into his gloomy warnings and investing philosophies in his most recent interview with Bloomberg, which has been viewed over 1 million times. Grantham's 4 warning flags of impending disaster. 1. When the level of overconfidence reaches its apogee. Ironically, if the market's doing well, it probably shouldn't be. Grantham searches for periods of great market excitement and advises that here investors must be more careful. History books are much clearer when confidence hits these levels, Grantham told to Bloomberg. It's really tough to enhance your enthusiasm from where we are now, which is mild hysteria. When investors are overconfident in the stock market and believe that it will continue to rise indefinitely, they will borrow to keep the momentum going. And one of the most telling signs of optimism is a surge in borrowing to throw it into the market. Grantham also addressed similar concerns in his most recent Wire, which focused on the impending post-vaccine reality check. Investors are riding high on the COVID-19 vaccine rollout's optimism. But when the vaccine comes in place, the emotional high may come crashing down. Market participants will breathe an air of relaxation, see around, and understand that the economy is still not in good health, said Grantham. 2. Underperforming stocks that are overvalued. Overvaluation in and of itself isn't a harbinger of approaching calamity, but the underlying numbers must be closely monitored. Grantham believes that overvaluation can last for years, but he also sees a troubling pattern of expensive companies with little sales and no earnings that are nonetheless among the market's largest. We survive in a world that's, at the end of the day, a real place of humans and production, Grantham adds. So investors must return to basics despite their optimism. My QuantumScape stock started trading at USD 10 and has since grown to USD 130. It was greater than GM and Panasonic combined, and this is a fantastic firm, but it holds no qualms about announcing that it won't be producing batteries for the next 4 years, Grantham says. It exemplifies many tech stocks' nature today, as well as the concerns that they are burning cash while years away from production. 3. Unemployment is high, and the central banks don't have tools for dealing with it. An announcement was made by the U.S. federal government about a slew of monetary policies in March 2020 to mitigate COVID-19's economic effects. However, rates of unemployment haven't rebounded, and the Fed has used nearly all of its available tools to keep markets afloat. If you look back before COVID, you'll see that we've lost a lot of economic strength, Grantham said. We have less persons working and a smaller supply of goods and services, yet the price is far higher. When you have a long 16% U.S. government bond, you could have many rescues. You don't have much to throw on the table when interest rates are at their lowest in history. 4. Don't all burst together. The stocks of junior growth next sank, followed by the medium growth stocks, and eventually the market died of 1,000 cuts. However, Grantham cautions that not each bubble burst in the same style, and that the bubble can stay in a holding way for a longer duration. The trouble about a bubble is that you don't realize you're in it until it's too late. Is it really the planet's end? In his Wire, Grantham warns that nailing the timing on a bubble is a risk to the career. Either you call the bubble too soon, or you ride over the cliff every cycle. GMO has absolutely been chastised for staying conservative, to the limit where $2.2 billion has been pulled out of the fund, leaving it in search of greener pastures. While Grantham's economic concepts are true, the market is susceptible to disruptions as well as the whims of a person's behavior and emotional funding. Following the COVID-19 vaccine, there may be new hope, extending optimism a little further down the road. Fortune-telling is not without flaws, but only time will tell. Thank you for watching. Let us know your response in the comments below. Hit the bell icon for more amazing content, and like and share the video with your friends, and stay tuned.